Let's start this episode off by making it abundantly clear that I am not a lender. I am a credit expert. I've been doing this for over 7 years, and in that time, I've worked with hundreds of people trying to get them approved for mortgages, car loans, business credit, all of the things. And what have I learned through this process? This is what we're going to talk about. There's a difference between people that think they know what lenders are looking for and what lenders are actually looking for. So we're just going to get into it. Hey, what's going on, you guys? What's good? What's good? Welcome, welcome. I am Tamiya Robles. I'm a credit expert. I'm the owner of my company, Fix My Credit Now, E50.com. I'm the host of my podcast, Coast to Coast Credit. I'm NAREB High Desert Chapter President out here in Victorville, California. What is good, you guys? So, I got to give my thank yous. Thank you guys for supporting me, downloading, liking, sharing, subscribing, referring people over, scheduling your consultations, trusting in me as far as the credit aspect is concerned. Thank you so very much. All the people that are checking me out across the globe, I am so grateful for you guys as well. Thank you. I don't know what's triggering y'all in Africa, but I'm not complaining. But thank you very much. Again, there will be no me without y'all. Okay. So thank you, thank you, thank you. So getting into today's episode, I came about this because people are obviously contacting me to fix their credit, and people do trust in me to the point where they rely on me to give them answers on what will and will not get them approved, whether they're trying to purchase a car, whether they're trying to purchase a home. And I tell you guys, I like staying in my lane. I'm not a lender. Okay. I just can't do it. I am a credit expert, but I've worked very closely with lenders. I currently work closely with lenders. I work with them so much that I'm used to hearing what gets people approved and what gets people denied, but it doesn't mean I know enough to give you answers. I know the bare minimum. I know the basics. I know basically as much as you guys would know if you looked into it a little further, but I'm not especially. So what I want to say, I want to give a little bit of a disclaimer. Go contact your lender for whatever you're trying to get a loan for. Contact a lender in that field and ask more detailed questions. Let me just say that first. What I'm going to discuss with you today is, again, just what I've been through over the years, what I've learned over the years from talking to lenders. And that's all I got. You know what I'm saying? That's all I got. But I would even fact check with a lender in that field. So, for example, if you're trying to get a home, uh, contact the mortgage lender and hear what I'm saying, but then verify it with the mortgage lender. If you're trying to get a car, do the same thing. But right now, we're just going to go over the bare basics. Okay. I do want to say people walk around thinking that their credit score is everything. And I've talked about this numerous times. It's not just about the score, it's about the profile. But I've seen people with 700 plus credit score getting denied. I've seen people with 600 credit score walk away with whatever they applied for and have a good deal, right? Because it's not just about the number, it's actually about the profile. It's about what's on your credit profile, and you have to consider that. All right. Your history, the length of history, your habits, what your risks are. Are you high risk or not? Your income. Like there's so many different factors. You can have a great credit score and get denied, people. It happens. Y'all talk to me about it all the time. So let's break it down. Auto lenders, for example, a lot of times they just want your credit score. They do focus mostly on your credit card. your credit score. So when you go in to buy a car, they're not just looking at your regular credit score, they're pulling from a specific version of your FICO score. Because most people, I'm not going to get into FICO Vantage score, but we're going to just mostly talk about FICO score. Okay. If you want to know the difference between what a FICO score and a Vantage score is, go check out my past episodes. Even on YouTube, I give you visuals. All right. But in the FICO world, okay, there's different versions of FICO. And one of them is an auto enhanced FICO score. So that version is based on how well you've handled car loans in the past. Here's the thing. Most people don't even know that there is this auto enhanced credit score. And it's dangerous because it makes you think that because you don't know about it, you're looking at one score and you're thinking you're good, but in all actuality, it can make or break your deal. So if your score is between, let's say, 500 and 589, you're looking at a 16% interest rate-ish, right? Going into the 17%, possibly a car note around $800 to $900, give or take. Talk to a lender about it. Get your specifics. There's a lot of moving parts behind this, but just understand that they're not looking at your regular credit score. Okay? They're not looking at I think most people are looking at your FICO 8, but not when it comes to an auto lender. Okay? So if you're in, let's say, and I did a chart on this on YouTube, go ahead and check it out. But if you're in the range of, let's say, 590-ish to 619, your interest rate is going to be a little better. And then if you're outside of that, so just think of it that way, okay? Without giving you numbers. The better your credit score, the better the interest rate, the lower the car note. But understand there's other factors besides this, okay? There's $100 a month that you're saving, the higher your credit score is. Also, your income. So the car loan or the auto lender, they're looking at and focus mostly on that. But let's say, for example, you have eviction, charge off, or whatever. Believe it or not, they don't care about that as much as, let's say, a mortgage lender would care about it. I would still get those items removed from your credit report because more than likely they're going to weigh down on your credit score, therefore negatively impacting the interest rate and the monthly payment, which I just gave you an example of. Okay, let's kind of go into the mortgage lender and what they're looking for. So when it comes to mortgage lenders, stability is key. When it comes to buying a home, mortgage lenders play no games, okay? There's two types of lenders that you have to really pay attention to your credit profile as opposed to just the score. One of them is the mortgage lender. The other is when you're trying to apply for business credit. All right. But strictly talking about the mortgage lender right now, they want to see a lot. They want to see a history of responsibility. They want to see that you have a solid income. They don't want to see you job hopping from one company to another. So what that looks like on your credit report, for example, if you've ever seen your credit report and you see how your name is written, it'll have your name, your date of birth or the year you were born, your past homes or the places you lived in the past that's recorded, and they look at your employers. One of the things I like to do, I like to just get rid of all those employers and just leave one employer. Okay. Now, they're still going to ask you for employment and all of the things, but at least if you see it on your credit report as just one employer, that's a good thing. That's a positive thing. So let's keep it down to one. Now, when the FICO scores that they're looking at as well is a stricter version of FICO. They're looking at, in certain cases, looking at your FICO Classic, which is the oldest FICO version. It's so old and it's so strict, meaning that if you have any sort of blemish on your credit report, it drastically drops your credit score, as opposed to the newer FICO versions like the FICO 8, 9, 10. You can have some blemishes on there, but and still have a decent credit score. Not with the classic. You got a missed payment. I mean, it's like this across the board, but it's a steeper drop with your FICO Classic. So you got your FICO Classic. They're looking at your FICO 2, your FICO 4, your FICO 5. These are old ass FICO scores. Again, if you want to see me break it down in a video, I don't mind updating the video. I think it's about maybe a year plus old. It's an oldie but goodie. Okay, go check that out on my YouTube channel. But in the meantime, we're just talking about the here and now. They're going to use the older FICO version. So that means if you have collections, charge off, missed payments, any of the things that you think is no big deal, get that off your credit report because you're liable to get denied for credit. Okay. Now, one of the positive things that I've been hearing, depending on what type of lender you're using, you can actually only focus on the past 24 months. It might be 12 months with certain lenders. Again, speak to the lender, preferably the lender that you want to do business with. But ask them like, well, how far back are you going? Because you don't need a perfect credit report, but you need to basically fix at least everything within that 12 to 24 month window. If not, you're going to get denied. Okay. All right then. Now, also understand one of the biggest mistakes that people make with me is they come to me saying, I already know what my credit report looks like. I've looked at Credit Karma. Just because something is free doesn't make it right, y'all. I keep telling y'all that. You get what you pay for with that free shit. Cut it out. Cut it out. Go to myfico.com. Go to Smart Credit. Go to my annual credit report. Like, take the initiative and go to the source or pay for your credit report so you're getting the correct, accurate information. Credit Karma is not accurate. I've been telling y'all. It's not even a FICO score. Smart Credit's not FICO either, but at least it will give you a full detail of your credit profile. Credit Karma, I've noticed over the years, sometimes it's hiding information. You have to know where to look, or it's just simply not showing up. So you're not getting the correct credit score. And again, it's Vantage and not FICO. Your mortgage lender is not looking at a Vantage score. Most lenders don't even know what the hell a Vantage score is. So get out of that Credit Karma, Credit Sesame. I've had people say, oh, my Capital One gives me credit wise. It's trash. Go straight to the FICO version. Okay. What mortgage lenders are looking for on average, please speak to a mortgage lender. I don't want to hear none of y'all coming at my neck talking about Tamiya said this and that and you didn't know. We're not doing any of this, but I'm saying on average, this is what I've heard and learned about over the years. To get approved for a mortgage, you need a credit score of at least 120. They prefer, I'm sorry, I said 120. They're looking for 620, but on regularly they prefer like a 680 or higher, but they could do some things with a 620. They don't like recent late payments. Now, I have one lender that I'm dealing with who says, okay, if there is a late payment within the past 24 months, okay, but I can approve them if they have ongoing payments, on-time payments 4 months after that late payment. Again, speak to the lender. I'm just saying what I heard. They want at least 2 to 3 open accounts that are in good standing on your credit report. Now, what does that mean? If let's say, for example, I have some people that have pretty good credit, none of the accounts are open. They're closed, they're expired. And I guess they've mostly been dealing with cash. A lot of people, customers of mine, they'll get good credit, they fix their credit, and then they don't use their credit because they're terrified, they're scared, so they don't want open accounts. I totally get it, but you need an open account so they can see whether or not you're high risk, so they can monitor how you're paying your bills, if you're paying them on time, if you're the primary account holder or not. There's a lot of things that go into that, people. Okay. So you need to have somewhat of a healthy credit profile in order to get approved, but you have to have open credit, not closed credit. Your utilization is a biggie. I know when the lender Sean I deal with, and you guys have seen our YouTube videos, is he'll send people over and say, look, T, this person has a high credit utilization. I need you to fix that. Sometimes I just need to give credit education. I need to explain to you guys how to pay down your credit cards. I know it's high. I know you don't have the funds at the moment, or maybe you do, but you don't want to give up the bread. I get it. But check out my YouTube channel. I have videos literally explaining and breaking down, okay, breaking it all down on how to actually pay down your utilization. It's huge. It's huge. It's a small percentage overall when it comes to calculating your actual FICO score. However, it is very impactful. So it can make or break a credit score. Like, you can have a credit card where you've maxed it out and now your credit score is like 600. But if you pay it down to 15% utilization, it doesn't have to be 30%. Stop listening to some people. It could be 15% utilization or less. You don't have to zero it out. You don't have to. You can leave some change on your credit card. It can immediately boost your credit score all the way up to the 700s, depending on what else is on your credit score. So your credit utilization is major. You can't have recent collections and charge offs. You have to be consistent with your income, your job history, all of the things. Focus on those things when you're trying to purchase a home. They want to be able to trust that once they get you approved for this mortgage, that you are able to afford to pay this. If not, I think, if I'm not mistaken, check with the lender now. But if you cannot pay your mortgage within the first like 2-3 months, they will take that mortgage away from you. Yeah. So they're not going to play games because they lose money when they do that as well. So you got to come correct when you're coming for a mortgage. All right. The next thing, credit cards and personal loans. Believe it or not, they still have standards. All right. So these two might be a little bit more flexible when it comes to your credit and your credit profile, but it doesn't mean they have zero rules. Okay. Now, they're looking at how many times you've applied for credit recently, and where that comes in at is that's your inquiries. So your inquiries are very impactful in this particular situation. What it looks like is you're begging. It looks like you're begging for money. Therefore, you are at high risk. If you're trying to get a loan, a personal loan, hell, even a business loan, we could talk about that too. But they're looking at it like, why don't you have your own money? And if you don't have your own money or your own credit, like, why are you going around asking people for money, and so many different types of people? Because it's like, what type of loans are you applying for? Is it store credit? Is it a mortgage? Is it a car loan? Like, why are you begging for money? You seem untrustworthy. You're like the panhandler of credit. They don't want that. They don't want to deal with that. It's not safe, because they're going to look at it like, if we give you some money or we give you a line of credit and you're owing all these people, we don't know if you're going to pay us or not. Okay. They're also watching your balances. They're seeing if you've maxed out cards or not. It's wild, crazy. It's not hard to get approved. You have to know what to say when you're applying for stuff, but your credit profile has to look like you know what the fuck you're doing. Like, you know how to handle credit, you know how to pay people back and all of the things. If not, they're not going to bump with you. They're just not. Okay. Store cards, believe it or not, they pay attention to them too. Now, you might look at it like, oh, that's no big deal. That's just a store card. It's a gas card or whatever. But it's still a line of credit. It's still in that same realm of personal credit and credit cards. So get it together. Don't be like, oh, I got to pay my Amex. I got to pay my Chase. I got to pay everybody else. Oh, that gas card is nothing. I only use it for such and such, and it could go over. It's no big deal. Okay, you're going to be denied. You're going to be denied. So pay attention to your store cards as well. All right. So again, getting approved isn't always just a win. So just because you got approved doesn't mean you won. I've seen people celebrate and they've gotten like what 24% interest rate. I told y'all about that when I purchased that car, and I thought I was balling because I got approved for a car, drove off the lot, didn't pay Nathan, and my interest rate was like what 27%. I didn't even know anything about interest rate. I knew my monthly payment was high as hell, and then they dropped it, but it was still like 20, like 1%. It was wild. It was wild. But just be careful. You want to have good credit. You want to have a good credit profile as well. So you're not paying crazy high interest rates. So you're not paying a high monthly bill. Okay. The one who has the low interest rate on good terms and flexibility, that's the good win. Okay. But it comes from having a strong credit profile. I'm going to always keep repeating that. I'm always going to say that in all of my lives, because you guys are not understanding. And those that have good credit feel like they, or a good credit score, y'all feel like you don't have to get any sort of credit repair. When you do, you're going to get denied for stuff, or you're not going to get the best value out of the loan that you got approved for. So let's talk about solutions here. Okay. If you made it this far, thank you. I appreciate it. But I have to break this down. Like, some of my podcasts aren't going to be story times and we're kikiing and cuckooing. Like, I got to still give y'all the facts. All right. So first and first, mostly fix your credit. Whether you have a high credit score or a fucked up credit score, it is your credit profile that you need to pay attention to as well. All right. You don't want to have a good credit profile. You got a low credit score. You don't want to have a high credit score and a fucked up credit profile. Both of those people, or any of those, if you have any of that, you're going to get denied. All right. So if you're serious, and I mean serious only, I don't need people calling me just to say hi, to see if I answer the phone and to compliment whatever the fuck's going on. I don't give a shit about none of that. I only care about fixing your credit. Go to fixmycreditnow850.com. I got y'all. You know I do. I'm going to tell you now, because this last week I've had some interesting experiences with weirdos contacting me for credit repair, right? I don't need to hear a sob story. I'm going to just keep it a beam with you. When I look at your credit report, when the lenders look at your credit report, they do not see your backstory. They don't see that you just got divorced. They don't see that you lost your job and things ain't fair. So if they don't see it, I don't need to hear it. What I need to do is first know, do you want to hire me? Yes or no? All right, cool. Now, is any of the information on your credit report just simply not yours so I can handle it a certain way? Okay, it's yours. Okay, I don't need the backstory. I don't need to know none of that, right? Cool. Let me handle this. Let me fix it. Let me repair it. Let me do all of the things. Okay, boom. Now that we got that under the way, you have to pay. Okay, this ain't free. This is a whole ass business I got going on. Now, the holidays are coming. Sometimes I do pro bono work. That does not mean you need to ask me, hey, will you do it for free? Everybody wants their credit done for free. The reason why I stopped doing credit repair for free to multiple people is because people don't appreciate when you do the work for free. It's weird. It's just weird. Just trust me. I've been in this game long enough to know better. Every once in a while, I will do pro bono work. That's it. Okay, but for the most part, 99.9%, I'll do you one better, 99.99999% of the time, you have to make a payment. All right. I don't do this for free. I don't do this for fun. I don't do this because I'm bored. I do this because it's a business that not only that I live off of like any other company, but this is a business where it helps people. So I'm here to help people. So if you're scheduling a consultation and you're on the fence and you're undecided and all the things, I'm going to tell you right now, because the last guy I was dealing with, I'm not here to convince you to work with me. You came to me. You were referred to me. You saw me on social media or whatever. You know what my life is about when it comes to credit repair. All right. Take it or fucking leave it. But I'm about my shit. I'm about fixing your credit. I'm about repairing. I'm about education. I'm about getting you to where you need to be. If you don't have the bread, then there's no need to call me. You know what I'm saying? I will work with you though. I'm very flexible and I'm also like the cheapest in the game. So you can't fuck with me as far as that's concerned. But when you're ready to start, when you're ready to invest in yourself and your future and your family, get at me. I got you. All right. I got you. Please know that I do have a lot of DIY products. Go on my page. Go under my fix my credit now at 50.com. I got y'all. But if you need me to fix your credit as an expert, you got to set up the consultation. Let me look at your credit report and we'll go from there. All right. Lastly, before I let y'all go, now is the time if you guys are interested in having a credit repair business. Now more than ever, this is the season. Right before the end of the new year, the end of the year, people are trying to go into the new year, new credit, new me, new all the things that little cutesy things that people say at the end of the year. I will have the classes. These classes are not free, people. Okay. I think I'm doing it now for $300. It's a 3-week class, 3 days a week for 3 weeks. Boom. Send you on your way. You got this. All right. But yeah, you guys, like, hopefully this helped a little bit. I'm going to update that video where I show you like a chart and give you visuals and all the things. Just so you can see that there's different FICO scores, different FICO models, right? There's Vantage, there's FICO. I never get into Vantage too tough because most lenders don't use them. Some do though, some do, but it's not enough for me to like really break it down to a T like I do FICO, just so you're aware. All right. But yeah, you guys, come on, let's get with the program. You guys all say the same thing. Oh, they didn't teach this in school. I know they didn't teach this in school, right? But we got to get over that. We got to stop saying it. Now we know enough that we have to do something about it. So let's do something about it, you guys. Knowledge is power. I know that's like a oldie but goodie, but it is. All right. So let me stop rambling. I appreciate you guys so much. Please be sure to like, share, schedule your consultations, download. If you see me on TikTok, gift and all that. What that is, it just gets me in the algorithm so I can reach more people, all the things. I'm not in my Facebook groups like that anymore. Yeah, I might get back into it though. But check me out on Facebook, YouTube. I'm mostly on YouTube and TikTok nowadays, but y'all be able to find me. You can Google me. I'm everywhere in these streets. Okay. But anyway, you guys, I wish you guys the best of luck on your credit journey. I will talk to y'all later. Take care.